Thank you for watching my video. Please like and subscribe, even though me asking you to do so will not change whether you will or will not. I'm not a qualified financial advisor, so any investment decision that you make, you're completely responsible for. Upon completion of this YouTube video, you have the legal right to proceed to another YouTube video, or if circumstances allow, you're allowed to play outside on the street with your friends. If you do not find the content engaging, you do have the legal right to opt out of watching this video at a time and place of your discretion. Side effects of consuming the content in this video may result in better decision making, depleted sense of humor, and insomnia. Phew! Alright, let's start the video. So, money is stored economic energy. And for those of you who are into physics, you know that energy cannot be created nor destroyed. Now, I know that wealth can be created out of nothing, but here I want to focus on the destruction side. Energy can never be destroyed, as it can only be converted to another form. And this is pretty much true for wealth as well. It is very rarely destroyed, and whenever there is a perception that has been destroyed, it is usually only being converted into another form. To explain my point, I pointed that wealth primarily exists in 4 pillars, or seasons. It is growth assets, such as shares and real estate, inflation assets, such as precious metals and cryptocurrencies, there is a recession assets, such as bonds, and there is deflation assets, such as cash. Now, an economy has 4 seasons between growth, inflation, recession, and deflation. And these seasons do not come in order, nor do they run for a consistent period of time. As an example, growth may last for 10 years, which is then followed by recession, which only lasts for 6 months, which is then followed by deflation, which only lasts for 1 month, which is then followed by inflation, which lasts for a few years. In all of these seasons, the investors holding the correct asset classes will feel better than the investors who were out of the season out asset class. And next time that the seasons rotate around, it'll be in a different order, and every season will go for a different time period again. So, to preserve your wealth battery, think of as having at present in 4 asset classes. So historically, growth periods will last longer than the other 3 seasons. So although having an equal allocation in all 4 seasons will work well for you, it is actually more efficient to have the majority of your wealth in growth assets. Now when there is a major market crash, such as the COVID-19 crash, or the GFC, there is a perception that wealth has disappeared into thin air. But this is not true, as factories can produce just as much product, cafes can sit just as many diners, and airliners can fly just as many passengers, and mines can mine for just as much material as they could before the market correction. The only thing that has changed is the demand or the perceived value of the wealth of the affected business. So whilst the wealth of growth investors was declining, the wealth of recession and deflation investors was actually increasing. Now there is an exception to this when there's actual physical destruction. So unless there is an Australian-style bushfire or an American-style peaceful protest riot tourist visit in the capital, or an English soccer victory party, where there's physical destruction, there is a loss of wealth. But unless there's physical destruction, wealth has never actually been lost. So yes, this is interesting to know. How is this relevant to my portfolio? Well, it's relevant because too many seasonal investors pick a season and then throw all of their eggs into those baskets. For those of you who are watching too many Apocalypse Venezuela videos on YouTube, they generally go way too heavy into deflation and inflation and recession assets. For those who are too optimistic, they throw too much into the growth assets. But in reality, no one can predict the future. And the most important thing in investing is survival, or to never lose money. So if you prefer to be a growth investor and you invest in all 4 seasons, you will get a little bit frustrated about how the other 3 seasons or assets will drag your primary asset class. But when the brown stuff hits the fan, you'll be very happy that you've got the other 3 asset classes. Anyway, thanks for watching, and don't forget to like and subscribe and all that other stuff will allow me prompting you to do so will not change whether you're going to like and subscribe. So all I have to say is have a nice day. Thanks.